All right, it's moon time. Moon time. All right, guys. We're going to talk today about Mentis Life Sciences. What we're going to do something is very unique. Look, I'm going to break down the stock according to my best-selling book, TenBagger Blueprint. It's already a massive global bestseller, #1 best-selling book of all time. Although it hasn't even it's not even out yet officially. It's going to be out in a couple of days. Go to Amazon, Amazon.com. And you get the info over there. I'm going to post the link. Actually, the link is in the video description. So in the book, I have something called my 60-second due diligence. That's right, 60-second due diligence formula. And what that does is it allows you to, you don't want to waste time. You want to look at a stock, and in 60 seconds or less, you want to know, is this thing worth, taking a look at? Is it worth buying, or is this a dog you want to pass on? So I'm going to give you my 60-second due diligence analysis right from the book. I got the manuscript right here, and we're going to analyze Mentis, which I believe, my opinion, this stock has at least 20x upside potential. From here, stock is about 3 cents US. It is taking off. All the penny stock billionaires are loading up on the stock. And let me just change the banner over here to make this a little more. This is our baby unicorn stock. It is a baby unicorn stock. That's right. That's what this thing is. Mentis Life Sciences. Let me just pull up the charts. Okay. So by the way, I like this type of chart. You guys know why I like this type of chart, which had this crazy high. Doesn't matter if there was a split. None of that matters. What matters is the chart shows this stock, NMLSF, has traded as high as, $3 and how much? $3.24. That's what the chart shows. Today, it's trading at 1% of that. That's right, 1% of that value. Now, I'm not saying it's going to go back to $3. Is it possible that it goes to $3? It actually is. There actually is a path to be a $3 stock. But let's first analyze it. Okay, so look. So again, my book, TenBagger Blueprint. Look, this is everything I know about. Finding stocks that have 10x, 100x upside, promoting these stocks. It's all revealed in this book. Everything. This is everything you need to know is in this book. Well, guys, I've created over $1 trillion in wealth for shareholders in the last 25 years, introducing you to countless stocks that have increased, 10x, 20x, 50x, couple hundred baggers, way too many doubles and triples to count. And let me give you my system here. This is, anytime I get a call and somebody tells me, hey, check out this stock, whatever. So I go through this due diligence process. It only takes me 60 seconds. You don't need to have an MBA. You don't need to be a CPA. You don't need to know anything about accounting, none of that stuff. Very, very simple. Okay. There's 10 things I look at. Number 1, I look at the chart. Number 2, I want to look at the story. Does the story make sense? What's the market opportunity? What's the TAM? Number 3, traction, news flow. We're going to cover that. Number 4, what are the catalysts that can drive the stock to be a 10-bagger in the next 2 days, right? Number 5, inflection point. Is the company, in fact, at the inflection point right now? Is it in the 10-bagger window? In my book, I talk about the 10-bagger window. What is this? If you look at any stock that's made those big moon moves, even this stock, even Mentis in the past, if you look at the stock, all this history, the big move was made in a very short period of time. How short of a period? I'll tell you exactly. Just I take a look at this. Between October 23rd and January. So you're talking about a 2-month period, is that 3 months? I don't even know. October, November, to 3 months. That's right. This company's been around for, 6 years or whatever. And in 3 months, if you own that stock for a 3-month period, when it was, in fact, in that 10-bagger window, you could have gotten in at, 30 cents and sold at $3.25. You would have had a 10-bagger. That is what the 10-bagger window is, okay? Every stock, any stock you look at, the big moves are made when it goes up 10x, 20x, happens in a very short period of time. If you read my book, 10-bagger Blueprint, I tell you exactly what to look for, how to analyze a stock to see if, in fact, it is entering that 10-bagger window. I believe Mentis is, in fact, in that 10-bagger window, but let me keep going. Number 6, CEO quality. Is this a guy who gets it when it comes to maximizing value? Number 7, valuation. Is this stock trading at a discount to peers? big discount. We want to buy things with a built-in profit. Okay, number 8, theme sector heat. Is the theme hot? Promo. Does the company have promotion? Is it going to get eyeballs on the stock? You got to get eyeballs on the stock, when you're delivering news in order to make it move, right? Number 10, market conditions. What are the market conditions like overall, right? So let's analyze. By the way, I'm open to any questions you have. I'm happy to answer questions. Make sure you check out the book. Leave your, what do you call it? Your review. Yeah. So right now the thing is on Kindle. We're going to put up the paperback version in a little bit. By next week, that should be up. And that should be, I guess if you order, you'll have it in a couple of weeks. So, it's going to be, it's officially goes live, I think, next week, right? The 18th, I believe, whatever, it doesn't matter. Anyway, so let's, before we get into analyzing Mentis, here's the thing. Look, guys, I'm very particular about the stocks I get involved in, right? So again, now, yes, we've had a couple of dogs, right? But we've also had a lot of winners, right? In my book, I talk about the idea of you got to look at these stocks as public venture capital investing. I've talked about this. And in the, again, I'm not the most articulate guy when I'm speaking. When I write things, I'm actually pretty good. I think I'm pretty good when it comes to writing things down. So if you read the book, it reads a lot better than I sound. But anyway, when we talk about, I got lost on the topic. Yeah. So when I analyze, when I take a look at a stock, one of the first things, I want to look at is the chart. Oh, sorry, I got totally distracted. Okay, so the last biotech stock I took on was CYDY, CYDY. That stock I introduced that at 50 cents. You could have gotten into CYDY at 50 cents. If you were watching Wall Street Reporter, within 10 months, CYDY increased to $10.01. Now it's not $10.01 today. Let me back up, man. I'm thinking and talking too fast. You got to look at these stocks in terms of public venture capital. That's what I talk about in my book. VCs, right? Any venture capitalists, they're looking for 10x, not even 10x. They're looking for moonshots. They're looking for 100 baggers. I mean, 100 baggers, not 10 baggers, 100 baggers, right? Now, they know that for every 10 deals they put money into, 10 companies that they invest in, one of them might work out, right? And that one is going to pay for everything and leave a profit, right? Now, the guys who do the early stage guys, the guys who do like angel investing, they put money to 30 companies. That's right, 30 companies, and they're hoping for one moonshot, which is going to, go up 100x, and that's going to pay for everything. And, because most of their deals go to zero. That's right. Most VC investments, most startups go bust. It's a fact. Penny stocks are not much better. Penny stocks are kind of, again, I talk about this in my book. Penny stocks are like somewhere in between a startup and a, small business. Most of these things are basically startups. They're losing money. They're development stage companies. But, they're really not quite good enough to clear market with like, a real VC. Like they're not going to go to a Sequoia, a benchmark, Sequoia, but they're not going to give these guys money, right? They're kind of like angel investor things, but a little more sophisticated. So penny stocks are in this kind of weird area, but you got to look at it as a VC. So when you buy anything I tell you about, anything you see on the Wall Street Report as a next super stock, by the way, there is a big difference between our next super stocks and kind of like the regular stocks we cover. I haven't done those in a while, but I'm going to do more of them because, we got to do it. Great question about TBP. I'm going to talk about that in a second. So here is the deal. Anytime you look at these next super stocks, again, this is venture capital, public venture capital. Okay, you got to be prepared. And I talked about this before. You got to be prepared that if you buy 10 stocks, 2 of them are gonna, one of them is gonna moon. It could go 10x, 20x, whatever. Another one might be up a 5x. A couple of them are gonna be maybe a double or break even, and 2 or 3 are gonna go bust, zero, bust. Okay, you got to be prepared for that. And the 1 or 2 winners in that group, that's going to pay for everything, and that'll leave you with a in theory. Again, I'm not giving investment advice. I'm not an investment advisor, but you do the math, you kind of round it up. You should be averaging a high double-digit return. if you keep doing that over and high. Okay. By the way, if you compound high double-digit return, it's a lot. Okay. Now notice, I'm not saying, you're going to make 10x, because out of 10 stocks we bring you, one of them might be a 10x, 9 might go to 0, right? One might be a 50x. Now here's the thing: these things, they kind of go in streaks. It's like a craps table in Vegas, right? For whatever, luck runs in streaks. The market runs in streaks. Everything runs in streaks. There's nobody who's been able to explain this, but it's a scientific fact. And then you have these outliers. So like in 2000, like normally our formula really works, but sometimes you get a lot of TenBaggers in a row, one after another, and then you can get losers one after another. So we had normally we get like, normally I would expect we'd have a couple of, 10-baggers, a couple of, doubles, triples in a typical year. What we had in 2000 was like, we had like 9 10-baggers in a row, which is like unprecedented, like out of this world, right? And then this year, 2002, we've had like 5 dogs in a row. We had one double. We had a double, which became a dog later, which was Organic Garage, was a double right out of the gate. Then it went like, I don't know. That was a disaster for a number of reasons, which I will address at some point. I will tell you guys the inside story, exactly what happened. At some point, I will reveal that, and it'll make people's heads explode. Anyway, bottom line is this: you got to be prepared with these stocks that they're high risk. So let's analyze Mentis. I got into the stock person. By the way, I invested in the private placement. I bought like a lot of stock. Like I own a lot of shares. I don't buy into a private placement to double my money. I'm looking at this as I'm looking for a moonshot, minimum 10x. I believe they are at that inflection point, and it can happen. So let's analyze it according to the 10 qualities. Again, pick up my book, TenBagger Blueprint, and it'll give you all the details. But number one I look at is, I look at the chart. First thing I do, I don't even care about the story. Somebody gives me a symbol, I look at the chart. I want to see a nice big double bottom. I want to see a stock breaking out above the 50 moving average. Let's take a look at this chart. Is in fact doing that. This is what we're looking here at, is the weekly chart. That's right. Now you get a huge base, huge 5-year base, right? Huge 5-year base. And what I love about it is it's had that moonshot. It's had that $3 number on that chart. I believe stocks tend to go back to their old highs. It just happens that way. I don't know. It's like it's one of those weird phenomena. By the way, I'm looking at the US shares. Let me pull up the Canadian shares, because that's kind of the one that's trading the most right now. That's the liquid one. Although the US is really, I believe, where the market's going to go. So what's going on? Look at this. Do we have a big double bottom? Yes, we have a huge double bottom in the stock. And in fact, it is breaking out above the 50-day moving average. So the chart, it looks great. The MACD also, we got a bullish MACD crossover on the MACD. The stock is lifting. You can see it's really taken off. It broke out. It's confirming it's a new uptrend, but it needs to break out above 10 cents really to get everybody on board, which essentially is a double from here. But it's been there just a few months ago. Number two thing I look at is story market opportunity. Is this something like something that could be a moonshot? Can this thing be a moonshot? How big is the market opportunity? Is this something that could be does the company have the potential to be a billion-dollar valuation? Is there a path to get there? In the case of Mentis, I believe, yes, the company, based on what they have, there is a path to becoming a billion-dollar business. I don't plan to stick around in the stock that long, because again, these things are development stage. And by the way, I think I'll get to where I think they're going to go. I think there's going to be an exit quicker, because again, this is very similar. These early stage biotechs are kind of like, those of you guys who know mining stocks, the resource exploration space, it's like an explorer, right? They got a piece of property, they got some good drill results. Potentially could be a elephant country, whatever it is, but it's a small company. They don't have the resources, and they don't want to dilute the stock to raise the capital, to do all this drilling to put the mine into production. So what they do is they do just enough work. to create maximum value in the shortest amount of time possible, which I love, and they sell it. They sell it to a bigger company, a producer or whatever. What happens in the biotech space is generally a company like this, what they're going to do is, I believe what the game plan is. Now they're going to the clinical trials. They just gave in their application to Health Canada for the phase 2A clinical trial for psilocybin microdose for Fragile X slash autism, I call it. Okay, so basically Fragile X, but it's on the spectrum of autism. The idea is if they get approval for that commercialization, they can expand into other areas. They can get into autism, other neurological areas with off-label, label expansion, all that stuff. So the idea is, again, their strategy is very, very smart. They're going for this. Again, watch the videos with Marv, the doctor. He's their chief medical officer. He says, look, the idea is we want to go for the bullseye, get this approval, get FDA approval, get Health Canada approval for a real niche thing. And then once it's approved, once it's on the market, then we can go into label expansion, other diseases, and this has massive applications, potentially for Alzheimer's, potentially for Parkinson's, other neurological disorders, right? Based on this microdose therapeutic that they have. But the idea is, first, you want to get it commercialized. And by the way, this guy has done it before. He's following a path that he's done before. He's gotten other drugs through the FDA process to market. He's had a 50-bagger running a public company in the past. Other guys involved in this, including Derek Avani, have had 50-bagger, 100-bagger stocks that they've been involved in, right? So the guys really behind this, there's a track record, right? So I believe that, this potentially, it's $1 billion business. The market right now is ice cold for biotech, for psilocybin, the shroom stocks. It's ice cold. If this stock was delivering the type of news flow that they are right now, a year ago, 18 months ago, this stock would be $1 today. No, period, end of story. So you guys have an opportunity. We have an opportunity right here where it's cheap because of the market. Okay, so on a scale of 1 to 10, the chart, I give it a 10. On the story, on a scale of 1 to 10, I give it a 10. Number 3, news flow. I want to look, anytime I look at a stock, 60-second due diligence. First thing, as soon as you punch up a symbol, when I look at the symbol, I want to see a bunch of news releases. I want to see a bunch of news releases back to back that show me that, in fact, the company is at that inflection point. Yes, something is happening. That's the pulse of the company. The news flow tells you the pulse of the business, okay? If the company's putting out news, it tells you things are moving. Now, it happens to be, okay, so here, how does Nova Mentis rank when it comes to news flow? Let me see, where is this? Nova.ca, let me see, let me punch it up. Honestly, not great, because look, I want to see back-to-back news. I want to see news every 2 weeks consistently. They haven't done a great job of that. Okay, so if you look, they had news today. So they got the preclinical study. The big news is last week, which is, and this is, by the way, the big milestone. We were expecting this milestone in the summer. I was expecting it in June, in May and June, okay? I was. It's taking a little bit longer. Welcome to penny stock world, okay? Things take a little bit longer, especially with biotech. Okay, so their news flow, so they got news today, they got news last week, and they had news 3 weeks ago, and before that, the news was like, almost 2 months ago. So it's like once a month they were putting out news. Okay, so they completed production of the capsules. So they're getting ready to submit. So they're doing news. I mean, they're presenting data. But the news, again, in the last 5 months, they've had only 1, 2, 3, 4, 5. They've had 6 releases in 5 months. It's not great, but the news that they're putting out is actually substantive. That's the only good news. That's the good news. What they should do, again, companies don't want to hear this, whatever. Some people don't want. What a company should do, what I recommend is you got to put out just updates on whatever. I mean, there's a lot of stuff you can talk about. It doesn't have to be hard news. But you got to keep this thing front of center with investors. You got to keep the news flow. They haven't done a great job of news flow. So normally, normally I would have given it a 2 on a scale of 1 to 10 for news flow. Okay, to be candid, but because the news flow is actually substantive, they're putting out like real stuff here. you know, like I'll give it it's real news. So I'd give it a 5 or 6. I'm not happy about the pace and the cadence of news flow. That's the reality, okay? And there's nothing I can do about it, okay? Unfortunately. This company, you know, I'll talk about it later, but this is not the perfect TenBagger in terms of it. Like yesterday, I did a video on Nextech. I said, hey, this company, everything that Nextech is doing fits that TenBagger blueprint. It's all TenBagger material. And I believe, you know, that's why that stock could be a TenBagger again. I believe Nextech can go to potentially, I'm not saying it will, not making representations. It could go to $10 based on what's going on in there, based on the fundamentals. This company, on a scale of 1 to, you know, on all the 10 items here on the TenBagger blueprint, some of them they're not doing great on, but the others are real outliers that make up for it. So you got to kind of decide for yourself. I like the stock. I think it represents an asymmetric bet. I think it's an asymmetric bet where you're betting, you know, essentially the stock is, let's call it 5 cents Canadian. You know, where's it going to go to a 0? I mean, you know, basically you're betting a nickel because it could go to 0. It could. You're betting a nickel. The upside could be $1, right? It could be $100 million plus. So you're betting a nickel possibly to make 95 cents. I think it's a pretty good risk reward because if you do 10 of these, you're going to come out ahead. I mean, the odds are stacked in your favor. You know, it's like you got the house edge because of everything else that's going on here. So, yeah, so they've actually put out some very substantive news. Let's take a look here. So they basically said, they said, yeah, they got powerful news. You know, the positive data, blah, blah, blah. They're going into the thing again. And then last week they announced the Health Canada trial application, which I believe is the main thing, right? So let me pull this up here. Okay, so news flow, they could be doing a better job. Okay, I'd give that. I mean, it's substantive, but they haven't had enough of it. They should be putting out more. I'm not happy about it. I'd give it a 5 on a scale of 1 to 10. Catalyst, this is a big one. So Catalyst, you know, what does the company have that can drive this to be a TenBagger in the next, I don't know, 30 days, the next week, right? This company has a massive catalyst. Okay, Health Canada application for phase 2A clinical trials for psilocybin microdose for Fragile X. So we're waiting for Health Canada to come back and say, okay, you got to go ahead, start the trial. What happens then is they got to round up the patients. They got to get a certain amount of patients that they need, and then they go to work. Now, what do you call it? So that, my friends, is the big catalyst. I think when Health Canada says, okay, go ahead, the stock probably on that news, I think it's probably going to double or triple, in my opinion. It's not going to go it's not going to be a moonshot. I think it could double or triple on the Health Canada news. The real moonshot is if they have positive data. That is going to take a little longer. That might take a few months, okay? So that, if they do get positive data, that's when you potentially could have a 30, 50 cent stock. You could have a TenBagger. And again, you see this all the time in the biotech space. It's binary. Either they have the goods or they don't. This is science. As Dr. Fauci said, hey, trust the science. Literally, you got to follow the science. Literally, you got to follow the science. So if they have good positive data, right? And by the way, look, this guy, Marv, watch the videos. Please watch the videos on YouTube to understand how this guy thinks. He has run clinical trials like countless times. I mean, this guy is, he's been out there. He's been in the business 40 years, in the biotech business, okay? He's taken a bunch of drugs into commercialization through the FDA process. So the guy's been there and done it. He's run clinical research organizations. So he knows how to design a clinical trial so that it's a success, right? So basically, you got to set it up that, okay, here is the outcome we're looking for. Here is the endpoint. Do you deliver on the endpoint or not? That's all they got to do. Can they show that, okay, these people, whatever it is, they got better, they improved, what do you call it, based on objective data. So they're doing all this together. They're going in it to win it. Watch the videos. This guy knows what he's doing. Okay, this is like if you look at all these other biotech, these penny stocks, these a lot of these shroom stocks allegedly, most of these things are fugazis. Most of these shroom stocks, the Cybins, the Mycos, all those are all fugazis. Okay, those are not real. Those are all wannabe fly by night pump and dumps, basically, like in a legitimate way. I'm not saying they're scams. They're basically they're just legalized pump and dumps, which happens in Canada. It's the Canadian thing. This is the real deal. They got a guy who knows how to bring drugs through the FDA process. He knows what he's doing, right? So let's go into yes, the inflection point. So the catalyst is Health Canada. I believe that could give this thing a double once they announce. If they get positive data, potentially it could be a 25-30 cent stock. Why am I saying that? Am I just making it up? Am I making crazy, outrageous claims? Let's analyze this, okay? So the company has 100 million shares out, right? So they got a $7 million, $6 million valuation today. Okay, so it's a company going into phase 2A clinical trials, something that could be a blockbuster, could have applications for Alzheimer's, Parkinson's, other neurological, autism, huge autism. Potentially, it's $1 billion market, right? Potentially more than it's a multi-billion-dollar market. What's a company that's going to phase 2A? Again, we don't know if they're going to win. We don't know if they're going to win. But if they're going into phase 2A trials, usually in the biotech space, these companies get valued every time they reach a new milestone. Again, it's just like the mining business. If you get good drill results, your stock is going to go up. You don't need to start mining the gold. Again, a mining company doesn't need to start pulling gold out of the ground in order for the stock to go up 100x. All they got to do is show drill results that point to the possibility that they're getting very close to a commercial quantity of gold in the ground or whatever resource, oil, whatever, lithium. So these guys for biotech, all you got to do is show that you are getting closer and closer to something that potentially could be a commercial drug for the market. So right now, based on what they have, if you look at the comps, look in the biotech space, somebody in phase 2 trials for something this big should be worth 50 million plus, 50 million, maybe 100 million. That implies a 30 to 50 cent, really a 50 cent valuation. Okay. Now, if they do get good data that shows, hey, this microdose therapeutic works for autism, then it's worth 100 million. I mean, that's what somebody else would pay. Now, I believe what's going to happen is these guys, they really don't have the resources to go all the way. It's a fact, okay? They're not going to, by the way, this is not a company that is going to go and, commercialize this, go through the FDA process for the next 10 years. They're not going to do that. What they're going to do, I believe, again, this is not official. I'm not speaking for the company. I believe what's going to happen is they get some good data and they sell to another psychedelics company. There's a bunch of them on NASDAQ that have raised a lot of money. We're talking about, hundreds of millions of dollars that don't have any good clinical programs. Those guys might want to pay, 50, 100 million for Mentis, just like we saw happen with that other stock in the cannabis space. What was it called? Who bought that cannabis biotech thing like last year for like $1 billion? Shit, I forgot what it was. Whatever the company was, but you guys understand the story, right? So I believe what happens is they go into clinical trials, they start producing data, the stock starts running, and one of these guys comes out and says, you know what, look, we like what you have. We need to have a clinical program in our company for, let's call it, psilocybin for autism. Yeah, we'll pay you 100 million. We'll pay you 100 million. Why are we going to pay you 100 million? Because when we bring your program in-house, it's going to make our NASDAQ stock worth an extra 500 million. So it's going to become accretive. So I believe somebody could pay up to 100 million and it would make a lot of sense for them to pay 100 million. That's $1 a share. Okay, $1 a share for Mentis. I'm not saying it's going there. Okay, so catalyst, big catalyst is in the next 30 days. Inflection point. The inflection point basically says, hey, companies in the revenue business, business show they're ready to scale with research, with discovery companies like mining or biotech. The inflection point basically would be something that indicates that they're on the right track, that they have something there. Now, I would say for Nova, the inflection point would be if when they show positive data in the phase 2A trial. They are not at the inflection point yet. They are not. If and when they do get positive data from the phase 2A trial, that's the inflection point. That all of a sudden the market has that aha moment, and they say, okay, you know what? These guys have something. So right here, the stock is cheap for a reason, right? You're taking on a higher risk. Now, you could wait till they get good data, but then you might be paying 30 cents. It's almost like, again, like the mining business. You can buy them when they start, when they have just a story, but once they start drilling, once they start getting the assays that show, hey, we got, a kilo of gold for every, I don't know, whatever, 1,000 feet, whatever it is, a kilo of gold per ton, then the stock all goes to 100, right? So it's no longer 5 cents, it goes to 100. Okay, so CEO quality. So does the CEO get it when it comes to promotion? Does he have a track record? Okay. In this case, quite frankly, I really don't have a lot of dealings with the CEO of the company. I mean, he kind of inherited the clinical program. The guy that I'm betting on really is Dr. Marvin Hausman, the chief medical officer. He's the guy that's running the clinical trial. So these biotech companies, like this thing, it's kind of a weird situation. What you're betting on here is the clinical program. Is that going to work? So I don't know too much about I haven't really had any dealings with the CEO. We've talked to him. I mean, he's the guy that, by the way, we're Wall Street Reporter, Octagon is a paid consultant to Nova Mentis. So technically, although our IR program expired a little while back, but I'm an investor in the deal. So I think this is going to do very, very well. So valuation, number 7. So CEO quality on a scale of 1 to, okay, so number 5, going back, if we rank Catalyst on a scale of 1 to 10, I give this a 9. I give it a 9 on a scale of 1 to 10. Inflection point, we're not at the inflection point yet, so I'd give it a 5 because, actually, I'd give it a 6 because we're getting there. CEO quality on a scale of 1 to 10, I'd give it a 5. I don't know the guy. He's really not involved in really promoting the stock. So, I'd give it a 5. I mean, I wouldn't even give it any rating. Nothing against it. It just, we have nothing to do with them really. Number 7, valuation. Okay. I like stocks where we're getting in at a discount, where there's a built-in profit, meaning that, the stock is so cheap compared to the peer group. All we got to do is buy it, sit back, and wait for the market to go back into to revert to mean inversion, reversion to mean, right? But that's what they call it. So in the case of Nova Mentis, this thing is trading at a 7 million valuation. I think they should be worth right now 25, 35 million before they go into the clinical trial. So you get a 5x upside based on the value. Again, any company that's going into phase 2A, these things are worth 25, 35 million. Minimum. That's in a market like this. In a good market, it's 100 million. It's 100 million in a good market. Like if this was last year, I mean, not even 18 months ago, 100 million all day. Biotech stocks have been in a massively destroyed market. It's been horrible. Let me pull this up for you. Hang on a second. Okay. This is a I believe massive moonshot potential. Look at this beautiful chart. Look at this chart. $4 Canadian. That's where it's been. $4. Again, I believe these stocks tend to return to old highs. So we're above the 50 moving average with the MACD crossing over. Look at the chart. Decide for yourself. So valuation, I give it a 10 on a scale of 1 to 10. It's a 10. It's an absolute 10 because it should be worth 30, 50 million right now based on peer group comps. Okay? Number 8, theme sector heat. This is important. Is the sector hot? Because again, if the sector is hot, it magnifies everything by a factor of 3x. Now, where is the theme and sector for psychedelics? It's in the toilet. The sector is in the toilet. Let's take a look at, yeah, I'm going to answer this in just a second. So yeah, so let's look at this. Let's look how, you know, let's look at a bellwether in psychedelics. Atai went from 22. So Atai is down 90%. Let's look at MindMed, I think. Is it MindMed? This thing is down, you know, 90%. So all these biotech stocks are in the toilet right now. They're all in the toilet, especially the psychedelics. So the sector, on a scale of 1 to 10, the sector, I'd give it on a scale of 1 to 10, I'd give it a -5. No, it's not that bad. It's it's a it might be a 1. I mean, it's because it's not like, maybe it's a 0. Look, psychedelics and biotech are basically right now, they're ice cold. Okay, so this gets us like a 1. Number 9, the promo edge is the company doing promotion, you know, obviously with the best promoters, Wall Street Reporter. So technically, I mean, it's kind of a yes or no. I'm kind of stuck with it because, like, you know, basically, look, here's the reality. I'm just going to be very candid with you guys. These guys raised they had no money in March. They raised a little bit of money, just enough to fund the what do you call it, the clinical trial program, and a little bit of promotion, a little bit, not a lot. So they don't have any money for promotion. They basically don't. Everything is going into the clinical trial program right now. They have very little cash. So so basically everything is going into funding the clinical trials. I think they have just enough to get them through to you know, to a milestone. I think they're sitting on a bunch of psilocybin, pharma grade psilocybin. By the way, they made the capsules, everything. I mean, again, these guys are doing what everybody else claimed to do. They wanted to do. None of them done it except for these guys. So this should be a $1 stock. So I'm basically I'm doing pro bono work here right now because look, how many shares do I own? I own 5 million shares of this thing. That's right. In the prior place, I bought a ton of the stock because I really believe that these guys could have a moonshot. Okay, this guy Marv, he's had massive moonshots before. He knows what he's doing. He's designed the clinical trial to deliver results. The guy who brought it to me, which is Derek Avani, he's had 100 bagger stock that he was a CEO of that was in the cannabis space. He's had some massive wins. By the way, he's buying shares. He owns a bunch of stock. This guy's loading up, right? So look, I did my research into this. I feel comfortable. Again, I'm looking at this. It's a binary bet. Either it's a moonshot or it's not. Okay, I think it's going to be a winner. Market conditions. So on a scale of 1 to 10, I'd give it a 9 because, you know, we're not doing a full program right now. And also, you know, the problem is, in order to make the program work, they got to be pumping news flow like once a week, which they're not. So, I mean, these guys are not promoting the stock because they're not putting out the news flow that should be. If they were hardcore promoters putting out news flow, the stock would be $1 right now. So, market conditions. What's the market? Are we, you know, because this, look, the market conditions are important. That's a headwind or a tailwind. Market conditions, overall market conditions suck. You guys know this. I'm not telling you anything you don't know. So market conditions, I'd give it a 2, because it's a negative. The market, we're in a bear market. So if you round it all up, I don't know if you've been keeping score. The big things are 10s. The chart is a 10. The story is a 10. The traction, news flow, that's a 5. Maybe it was less because they were slow on the cadence. The catalysts are a 10. A 10. The catalysts are 10. This thing could moon based on the Health Canada announcement. Inflection point is a 5 because they have to hit positive data to get the real inflection point. CEO quality is unknown. He's not really, you know, he's basically a guy, CEO. He's not a biotech guy. Dr. Marv is the biotech guy. He's running the program. So it's a kind of a weird situation a little bit. Valuation is a 20 on a skeleton. The valuation is a 20. This thing should be worth 35, 50 cents just based on peer group comps. Now, promo edge, you know, I'd give it, I don't know. I'm basically doing free work. They got me, I'm trapped doing free work in this thing right now. It's ridiculous. Anyway, market conditions are like a theme sector heat is like negative. It's a 1. The psychedelic, basically for this thing, it's amazing. This thing is going again. It's swimming against the tide. This stock is swimming against the tide. It's like a salmon going upstream. That's what this thing is doing. Psychedelic stocks are down. Biotech is down. The market is down. And this thing is going up. It's going up against the tide. Just imagine what happens when it reverses. Okay, let me answer a couple questions in order of priority. Dwight, hello. Bentley, what about TBP? Great question. So that, my friends, is a case study. TBP is a case study in public venture capital. So we introduced the stock at here. Where was it? I don't even know. Was it a nickel? I think it was a nickel, right? No, it wasn't a nickel. I'm sorry. When did we get involved? I think it was in. When did we get involved? I think it was March of last year, right? 15 cents, I think it was, right? Yeah, 15 cents. I think it was 15 cents. 18, whatever it is, 15 cents, 18 cents, whatever. Company started, they got some news flow. They were doing the thing, right? And the stock went to 50 cents. You could have tripled your money. Now, that stock could have gone to $1. There was a short squeeze happening. They could have squeezed it and raised capital at $1. The CEO screwed up. Okay, that's what happened. The financing kind of put a wet blanket on it, and they lost a lot of credibility, and that kind of derailed everything. I haven't looked at this. I mean, this is the first time I look at this. We haven't worked with TBP in over 18 months. I mean, we only worked with them for 6 months. We worked with them between March of 01 and I guess September. Yeah, so that's when we were involved. So I haven't really looked at this since then. But yeah, it shows you, public venture capital at work. I mean, these things, you saw it. They can have moonshots if they don't deliver the data. If there are delays, it sets things back. If they do stupid financing, that sets things back. That's the reality. I'm just being very candid with you. Trip, that's an interesting. So Trip, I haven't done anything with Trip in over a year. So that was a weird one. So it's a still, a psychedelics deal. They stock went up. So, you guys had an opportunity to make, 5x in a couple of months. They raised a bunch of money, and then, he's been on vacation. I don't know what this guy's doing. He's buying some stupid mushroom. I don't know honestly, I don't know what the fuck the guy's doing. Okay. He should be buying. He's got $30 million in cash. He should be, he's quite frankly, Trip is not good enough to buy Nova Mentis. Nova Mentis is going to be bought probably by a biotech company. And if a biotech company buys Nova Mentis, that'll give them a clinical program. That's right, a real clinical program, a psilocybin clinical program in autism, which will increase their value by a couple $100 million. Okay, Mike. Bellwethers. Ooh, I haven't done a chart chat in a long time. Okay, so ARK. ARK. It's interesting. Okay, so ARK. Wow. ARK is basically I don't think I need to tell you that the trend is down. Hang on, let me pull this up. Okay, so ARK. Wow, ARK is in a pretty sad downtrend right now. Could we be bottoming? You notice the company is ARK has more or less found a bit of a base here. I think before I said that the 30s, like 32, 33, that would be a base, which would be like the lows, the COVID lows. And we're kind of there. I think we could be at a bottom for ARK, but it's got to break above the 50 moving average. And here's the thing. It's had a couple of breakouts above the 50 moving average. And if you bought it, it had a run, right? Yeah, you could have made a profit, but then it broke down. So you would have been getting whipsawed because, look, if you followed that system, right, you would have bought it over here. You would have bought it 44. It went to like 60, 55. But then the sell signal came at, 44 again. So you would have been whipsawed here. Again, you would have been whipsawed over here. And that's what's happening with NASDAQ. NASDAQ keeps kind of doing this. It breaks out above the moving average. It sucks everybody, and then it whips them back down. So, I mean, the problem with this moving average system, and again, by the way, it's something I talk about in my book, TenBagger Blueprint. It's a great thing that if you look at the 50 and the 200-day moving average, that's what the hedge funds use. That's I call it the billionaire trading system, right? The trillionaire trading system. The problem with it is, why isn't everybody a billionaire? Because it's so simple, right? The problem is, emotionally, you got to be willing to put up with getting whipsawed so many times. Not everybody can deal with it. You have a lot of churn. But when it does break out, when it runs into the trend, that's when the money is made. So you can look, these things can have massive trends. Look, when it broke out from 50, went to 150. I mean, from the base of the moving average, you would have tripled your money. Same, by the way, let me look at let me look at Nextech, NEXCF, which also I believe is going to be our TenBagger. If you look at Nextech, if you would have bought it every time it broke out of the 50 moving average, you would have made a ton of money because it broke out over here at $1.50. It went as high as $7.50. You would have had a sell signal at here, which was 4. You would have tripled again if you're super disciplined following the 50 moving average. You would have tripled your money here. You would have tripled your money over here. And by the way, right now we got a buy signal. We got a buy signal again. So you would have gotten whipsawed a couple times in the past. Where it's hanging on. It's hanging on to the 50. So look, it's getting whipsawed here. But that's what's going on. Okay, so let's look at Tesla. By the way, I believe next is going to be a 10x again. My opinion, not advice. Tesla. This Tesla chart is looking actually quite ugly. I mean, this looks like a Head and Shoulders top. It looks really like a Head and Shoulders top here. And look at the trend. The moving average is pointing down. The thing is really, it's a very steep. It's a steep decline. It's pointing at. So I'm surprised this thing hasn't gotten hit harder. I mean, Tesla's only down, I don't know, 60%. It should be down like 90 based on tech stocks. I mean, it's an expensive stock. It's interesting. Look, I think the markets really are going to bottom out in like February or March. A lot of these rallies right now, I mean, look, it's so easy to get sucked in. Right now, if you look at this actually looks pretty bullish. This actually looks pretty bullish. Like it's bouncing off this 50 moving average. But if you, I don't have the trend line here, but it has been able to break out of the trend line. It keeps breaking down below it. It's really weird. It's really weird. I don't know. I don't quite trust the. I mean, it's. Let me see here. It's like today is essentially it looks like a bullish formation. So we could have a run, but the overall trend, if I drew this line here, okay, if I drew this line. So you got one line. I'm going to draw it for you. You got another one here. You got another one. So it's never been able to break out of this trend line. Every time it goes to it, it breaks. So this is the trend line started from here, right? So we hit it here, broke out a little bit, crashed, tried to come in, lost momentum. The market overall is pretty weak. I mean, it's like hanging on to like by a thread. Otherwise, it'd be going to like zero. Shit, why is this thing not working here? Is my thing frozen? Oh, okay, it's working. Okay. I have no opinions on CBDT. Again, that was our 50 bagger. By the way, CBDT, it's pretty interesting. When we introduced that stock, they really, if you looked at it based on our TenBagger blueprint formula, they out of these 10 things, they only had a few things going for them. Only a few things. I think the chart was good. The story was good for the time. It was a good story, kind of based on the clinic stuff. News, and the valuation I thought was pretty reasonable. Sector heat, market conditions, promo edge. Everything else that was kind of like, not that great, and they haven't delivered on stuff. So, it's that was a 50 bagger. So it shows you, like, if you have a couple of these factors that are really, outliers, that are like super good, it can make up for a lot of the bad things. So again, like, for example, you could have, if you have massive catalysts, massive stuff, it could make up for like a lack of promotion, if you will, or lack of a CEO that's good, whatever it is, right? But you really need to have all those things being tens or close enough, But if one of those things is like a super, super thing, it could really run the stock. But it's not going to be sustainable. That's the only caveat. So if you look, well, for example, Nextech has all those things. So what's happening with Nextech, their move is sustainable because they're doing everything right. Like for that stock, everything is like aligned up 100%. Organic Garage, by the way, that's an example again. Public venture capital. Not every one of these. Look, we can bring you 9, 10 baggers in a row. You got to be prepared to have a couple of dogs. Now, OG was a stock that we introduced at 30. Was it 30 cents? What, 30? Basically, the stock doubled. It doubled in like 30 days. So it doubled in 30 days. They were delivering news flow. I love the story. I mean, I don't really care about the plant food, like whatever, the cheese. Okay, I don't want to hear about the plant food stuff. Like, I don't believe in it personally, whatever. But they want to promote it. Okay, so I love the story, the business with the stores. I thought that brand would have been a great brand for national rollouts. Everything I said about that stock, I really believed it. I thought that stock. I think here's the thing. I think Matt is probably a good operator. He's a guy who could run like a couple of grocery stores. He's not a public company CEO. Okay, there's nothing against, nothing personal. Not everybody could be running a public company. Most guys running public companies today should not be running those public companies, right? In order to run a public company, I talk about it in my book. What are the characteristics you need? You got to know you got to understand that your job is to make the stock go, promote the stock. You got to have everything in place. You got to have big balls to do these things, right? Quite frankly, what happened, should I go into it? I'll talk later. It's not the right time to talk about quite what happened. I'll talk about it some other point in time because there's, some things we might be doing with certain things. I'll talk about it at a different time. But anyway, bottom line is I thought they had a great story potentially. I think because the guy's a great merchandiser, right? I think if he had the right CEO, if he had a guy who knows how to promote, he had a guy who knows how to raise capital. By the way, they could have raised capital at higher prices, right? For example, if they had a situation where that Matt was like the operational guy and Evan Gappelberg was the CEO, that stock would be today, I believe it would be a $2, $5 stock. That's right. I believe it could have gone up 50x because what he would have done is he would have said, hey, we're expanding the stores. We're going to license the brand in the U.S., franchise, boom, 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 announce it. Stock starts running, raise capital, and actually do the thing, right? The stock is the tail that wags the dog. And this guy is always like, oh, I don't want to be say too much. I don't want to over promote. Whatever. I don't want to do this. I don't do that. This, whatever. What do you call it? And the problem is that he stopped promoting. They stopped the promotion. So in April, for reasons which I will explain later at some point, they stopped the promotion. Actually, he wanted to continue. To be very candid, they wanted to continue, but they wanted to like edit certain videos because what do you call? Actually, you know what? I'll tell you exactly what happened. Fuck it. I'll tell you exactly what happened. Look, what happened is this. And I'll tell you exactly. This is fascinating. Okay, so last year when we got involved with Organic Garage, right? OG stock doubled, right? And what happened was there was this guy, which probably will sue, who calls himself Wolf of Oakville, whatever it is. This guy is the biggest coward of all time. He wants to get a lot of attention. This guy starts writing letters to every company I have saying, "Oh, this guy's a scammer," blah blah blah. And then he starts writing letters to the regulators, TSX, BCSC, whatever, right? And then a couple of my competitors start writing letters. I shouldn't say competitors, a couple of copycats start writing letters to regulators because they say, oh, this guy is like putting out these charts with arrows on them pointing up. It's over promotional. He's a scammer. He's got the penny stock billionaire gang account. It's a top secret account. My name is right there on the penny stock billionaire gang Twitter and all. Which, by the way, Twitter has shut down our penny stock billionaire gang account for posting political comments. We're political dissident. I'm a political dissident again about Joe Biden. We put itself, that is the daughter's diary. After that tweet, we were just retweeting a news story. Twitter shut down that account. So Elon Musk, if you're watching, please reopen it. So anyway, bottom line is this. So, the TSX, the regulators, they start sending out letters to a couple of companies. They send a letter to, which is basically, the letter is, hey, are you working with this guy? How much are you paying him? Blah, blah, blah. It's basic stuff. I mean, this is like, yeah, it's all fully disclosed. Everything we disclose. There's no secrets. Everybody, people answer, but some of these guys, some of these CEOs, they're pussies. Canadian CEOs tend to be pussies, right? And some of these guys get panicked or whatever it is. So, again, if you want to be a 100-bagger CEO, you got to have big balls, right? So TSX sends him a letter saying, hey, we saw these videos you did. We don't like these charts with the arrows going up. We think it's over promotional, blah, 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 blah. We think that you said some things which are based on the valuation. So I wrote back to them. I said, look, guys, first of all, what we had on the chart chat, I could bring you, literally, if you want to go to court, I'll bring you 5 CFAs, 5 CMTs, expert witnesses who will testify under oath that everything here, that this is all based on traditional technical analysis. The valuations are based on traditional stock analysis, peer group analysis. Okay, if the peer groups, specialty retail in that space is trading at 5x revenues, whatever it is, and if the company delivers X, Y, and Z, yes, that stock will trade at 5x, potentially 10x revenues. It's all based on comps. I'm not pulling stuff out of my ass. It's all based on, traditional equity analysis. Okay, I could be a CFA if I wanted to be a CFA. Okay, I've done the whole thing. All right, I'm doing this longer than these guys. So anyway, so they get a couple of these knuckleheads to start writing letters, and I wrote back. We answered everything. Haven't heard from these guys. Everybody goes away. But the problem is he got panicked because they told him, hey, you got to pull off these videos. It's too promotional. You got to censor this, because they came up with a transcript. They had a transcript. Oh, you said that potentially this could be a TenBagger. Oh, we don't like this. We don't like this. We don't like that. Okay. So I said, look, I'm not changing anything. I'm not doing anything. If you want to work with me, this is it. You got to have some balls. If you don't want to have balls, go your own way. I don't care if you want to pay me, you don't want to pay me. I got enough money. I don't need to, I'm doing this as a hobby, basically. Okay. I like to make stocks go up. I'm the $1 trillion man. Okay. I don't need, to work with pikers. Okay. By the way, he's a nice guy. He's just surrounded by very bad people. He had a very stupid lawyer work with him who gave him very bad advice. So he had a very stupid lawyer. His board of directors are basically lowlives. He was surrounded by bad people is basically the bottom line. So bottom line is they stopped promoting the stock. And as a result, the volume dried up. Look what happens. Companies, there's a lot of guys who take credit for the work I do, right? There's a lot of guys who got a free ride. You got the Greasy George, Agoracom, you got other guys. They all take credit for the 10 baggers, the 50 baggers we've had. But look what happens to their stock, to those same stocks, as soon as we're no longer involved. The OTC volume dries up. Everything dries up. The stocks go down. What happened with Organic Garage? As soon as it stopped the promotion, volume goes to zero. Stock starts going down, and he wasn't able to raise capital. He could, that's the problem. The stock is the tail that wags the dog. I talk about it in my book, the bestseller, TenBagger Blueprint. If you have a high stock price, if that stock went to $1, if Matt would have, done what he was supposed to do, that stock easily would have been $1. Okay, easily could have been $1 stock, and he would have raised a bunch of money. It would have become a success, and today it might even be a $5 stock. Literally, that company could have been a $5 stock. Same thing, I think, with VSBY. If you look at a stock like VSBY, Visibility Group, I think VSBY could have been a $5 stock. It was at $2. I believe it was ready to break out. Jay Hutton, that guy's not a 100-bagger CEO. He's not 100-bagger CEO material. He's not a guy who understands promotion. He never valued it. He basically, this guy never even understood what we were doing. He never appreciated it. He's another pussy. Anyway, bottom line is that stock went to, whatever. He's trying to rely on some, what he was working with a Greasy George. Greasy George did nothing for him. Just take a look what happened. Look what happened with VSBY as soon as he stopped working with Wall Street Reporter. And by the way, how stupid is Jay Hutton? How stupid is that guy? He signed a new contract with us, and they gave him a very cheap price. He got grandfathered into like an old price, which was like half of what everybody else was paying, less than half. And he didn't appreciate it because the guy has a big ego. He thinks that he can make Jay. The reason your stock went up is because of Wall Street Reporter. That is 100% fact. Otherwise, your stock would have been stuck at 20 cents where it is today. Anyway, so basically he says, oh, we want to maybe be more conservative. Okay. So anyway, Jay now is 20 cents. He could have been a $5 stock because that story and VSBY is phenomenal story in the right hands. He's the wrong guy. He's not a guy who should be running he should not be the CEO of that company. He could be like a marketing guy. He's like a marketing guy. The guy should not be CEO of a public company. They should replace him. The board is incompetent. They should replace that guy. Hey, that's my opinion. What do I know? ARC. Oh yeah. Let me catch up. Yes, I was talking about Organic Garage. Organic Garage. You know what? Look, I don't want to knock a guy. I don't want to knock this guy, but you know what? Look, the fundamentals, the story. Okay, the story was there. Okay, that brand. And by the way, you know what else I don't like? I did a video on TikTok, which, he had a great logo, and we started with he had a great logo. All of a sudden, a few months in, like in November last year, he changes the logo with this like weird down arrow. I said, Matt, you got to go back to the old logo. You can't have a down arrow. It's a subliminal message. A down arrow in a logo is like a bad signal. It means negativity. It means something is going down, right? It's got a down arrow. Who the fuck does that? I thought the guy was like, literally, I thought he was like a genius merchandiser guy. So why would he do that? It was never made sense. He says, no, I know what I'm doing. It means discount prices or whatever. Okay, listen, I don't know. What do I know? I'm just a low-life stock promoter. What do I know about marketing? I mean, I've only, okay. Since that time he did that logo, fucking stock has gone straight down. And you know what? Again, with the right guy who would have just said, hey, here's what we're doing. We could be the Trader Joe's of Canada. That brand is a great brand. The merchandising is phenomenal. Really, those stores, great merchandising, great brand. It's kind of like, Tesla. The guys who were running Tesla originally, this thing was going nowhere. When Elon Musk comes in, the thing goes up 100 bagger. It's just the way it is, right? I mean, that's look, this is the business of venture capital. When we buy these penny stocks, a lot of times we don't know what we're getting into. That's why you got to diversify. You can't put all your money into one stock. Although, of course, we know that guy, what's his name? The kid in Vancouver who he parlayed like 3 in a row and went from like $2,000 to $1 million. He turned $2,000 to $1 million with our stocks. Actually, no, he turned $2,000 to $500,000 with our stocks, and then he doubled it with some other stock. I mean, in theory, you could do that, but the reality is you got to spread your money around because you never know. Human beings, they're funny. You never know with these guys. You don't know about their motivations, what they're thinking. Who knows what these guys are doing? It's some of these guys. I mean, by the way, none of our clients, but look, I see a company. There's a company. I don't want to mention any names. I don't want to be mentioning any names, but there's a guy that was introduced to me a year ago. Sean Black. Sean Black calls me up. By the way, Sean Black, Sean Black was basically selling burritos. When we brought him onto the program, nobody knew who the guy was. I mean, he had a small whatever. He was selling burritos. Very successful guy. Great business guy. I brought him on because he knew he could really explain it. The guy is an unbelievable salesman. I mean, dangerously unbelievable. So I brought him on because, hey, he could talk about TBP. It's good to have a third-party endorsement. So, people loved Sean Black, and, now he's a big celebrity, right? Which God bless, right? But but he only became relevant because of Wall Street Reporter, right? So he starts dealing with this other company. He brings it into me. He said, wow, I love this company. They're doing a roll-up in the IT space. Very interesting. Now, they're buying basically crappy companies, but if you do it really quick, if you have velocity, and if you really promote it, you have the right CEO, it could be a moonshot, right? So I thought, hey, the guy wanted to work with me. He said, yeah, let's do it. Then I don't hear from the guy. The guy goes MIA, right? The stock is trading, and I think Sean was talking about whatever, blah blah blah. And then I see, and then I think he hired Greasy George. He hired Greasy George because Greasy was like a little bit cheaper, and I think Greasy gave like a cheaper price because whatever. And he took credit. Basically, he used our track record, all those stocks. He said, "Oh yeah, I'm the guy that did it." He took credit for CBDT, fans, or whatever. He said, "Oh yeah, it's all me," right? So this moron who's running this company thinks, "Oh, why should I pay this guy X when I can hire this Greasy George for like half the price," right? So anyway, Greasy George did nothing for the guy, and this guy, I mean, in theory, that guy, great salesman, by the way, great salesman. But the problem is when you're doing that type of roll-up story, you're basically buying cigar butts. I mean, the stuff he's buying is basically garbage. But if you buy it really quick, the value goes up, right? Because you're selling a growth story. But intrinsically, the business they're buying, they're like, like garbage businesses. The story could work though. So, but then I see this guy is like, I said, let's go. This is a great story. I got to reach out to him because we should do something. Because if we were working with this guy, the stock could be like a $5 stock. Again, in order to do one of these roll-up stories, you got to have a healthy stock. You got a stock that's moving up because you could raise capital. You could use a stock for acquisitions. It's a big deal. It's a big deal. If you're doing a roll-up, you got to promote the stock. You got to have a stock that's going up. If you don't, look what happened with ESC. When he was on Wall Street Report promoting the stock, he was able to do acquisitions. As soon as he stopped, it goes in reverse. You can't do any acquisitions because you have no currency to do it with. Your stock is in the toilet. You can't raise capital. Hot girls. All right. We got spammers coming in here. Anyway, so then I don't hear from the guy. It goes MIA, and then I come across a Twitter thing. The guy's on Twitter playing golf like 2 days a week in Palm Beach, right? I mean, by the way, I don't know what tech CEOs operate a business out of Palm Beach. I mean, it's like a retirement place. If you were doing a money manager business, whatever, you're a retiree, that's where you go. You don't run a hot tech business out of Palm Beach. It just doesn't work. I've never seen it happen. I know that the guy from Netscape lives down there, but when he moved down there, when he sold his Netscape shares, when he made $1 billion, and he's basically 80 years old. He's been retired, right? Jim Clark. This guy's no Jim Clark. Anyway, I see this guy on the fucking Twitter. He's golfing every day and during the week. I mean, like on Wednesdays, Thursdays, and this is in Florida. So if you want to golf on the East Coast in the winter, you got to do it during the daytime, right? Because it gets dark, right? So this means that this guy is taking off full days during market hours. The guy must be going out, I don't know, 10 a.m., doing a full day of golf, and then I don't know what he's going back. Whatever. You don't do that if you're running a growth company. Okay, I've never seen a CEO plays golf. By the way, his whole Twitter thing is either he's golfing and then he's complaining about a stock being undervalued. That's his whole Twitter feed. It's either like, oh, here's an analysis. My stock should be worth X. It should be worth blah, blah, blah. And then next one, he's playing golf. I mean, come on. There's a cognitive dissonance, I think they call it, right? Cognitive dissonance. I don't want to see CEOs playing golf. I want to see guys working 24/7, making the shareholders rich. You got to be working 24/7, 365 to make the stock go up, creating value. And then look, when you have 100 bagger, when you have a 50 bagger, yeah, you could retire. You got to work your ass off for a couple of years, then you can retire, play God, do whatever you want. But if you're working for me, right? If you're my employee, right? I'm paying you. If I own your stock, you're working for me, right? So if you own that stock, which I'm not going to mention that stock, I don't want to be seen as bad-mouthing a company. That's not even a client, whatever. This guy's basically stealing from shareholders. I don't like that. So I don't like CEOs that play golf. I remember a year ago, a guy calls me up. He had a 3-cent stock. Yeah, I like the story. I think who was promoting it? I think somebody was promoting it a while back. Anyway, interesting story, right? The guy starts talking to me. Yeah, blah, blah, blah. He's in where was this guy? He was living in near where I was at the time, in Aventura in Florida, right? Miami, South Florida. By the way, there are no real companies in South Florida, no real tech companies. It's all bullshit. It's scammers, right? It's the truth. That's why I moved back. I couldn't deal with all the losers out there. Anyway, bottom line, this guy starts telling me a story. Then all of a sudden he brings up the fact that he's taking lessons. He's playing tournaments. I'm like, shit. I said, like, you know what? Look, I don't want to deal with a guy who's playing golf during the week. I mean, because he was a guy who was a serious golfer, like a tournament level guy, right? Look, I want a guy who's working the stock 24/7. That's what you need. Total focus. You got to have total focus. Oh, shit, the hot girls guy is still up here. I wasn't even watching. That is funny. That is funny. Let me look at Opti. Kevin O'Leary, another that guy is another Fugazi. Kevin O'Leary is the classic Canadian Fugazi. What's the symbol? I can't even find it. It's such garbage. What are you giving me here? Opti. I can't even find it. It's garbage. Listen, the only real stock is Nova Mentis, as far as I'm concerned. NMLSF. NMLSF. What are we at today? Right now, wow, 250,000 shares trading so far. Not bad. Not bad. Look, I believe when this thing starts moving, it is gonna move. Oh, look at this. Look at this. This symbol comes up, GNBT. This is another Florida company, South Florida companies. This guy, GNBT, Generex Biotech, this was CEO that I came across a couple of years ago. Great promoter. Oh, but never really hardest, but great promoter. He could have had a real winner. That stock ended up BK. It's got a Q symbol now, GNBT. We never worked with him, but again, it's you gotta be, to be a 100-bagger CEO, you gotta know how to promote the stock properly. Anyway, look, it's really sad with Organic Garage. That could have been a 100-bag. It had every indication from the story-wise. The story, everything made sense except for the cheese. I never really got into the cheese. Like, I don't believe in plant food, whatever. I'm talking about, okay, somebody wants to pay for your plant food, great, whatever. To me, the story was never about the plant food. The story was about the stores. If you want to talk about the plant food, great, whatever. But really, the stores, I thought he should have been pushing the stores hard, licensing that brand, and you would have had a $5 stock based on the stores. Forget about the plant food, based on the stores. So that's what happens, guys. Look, not every one of these things can become a 100-bagger. I believe, though, Nova Mentis could be potentially that 100-bagger. Hang on a second. Now, let me pull up something very important. Hang on. Let me pull up. I'm going to show you something very important. Wait. It's coming up. There we go. Let me show you something very important. There you go. Amazon. This is where you got to go. TenBagger Blueprint. This is the book. This is the greatest book ever written on any subject, stocks or no stocks. Here's what you're going to learn in this book. Look at the bullet points. How to find stocks with built-in profits. 10 success factors, which all 10x, 100x stocks have in common. How to analyze a stock in 60 seconds, which we just did with Nova Mentis. Asymmetric setups, 100 to 1 upside. How to find it. Catalysts. How to identify CEOs. Which CEOs have what it takes to be 10-baggers and 100-baggers. Look, guys, if you would have read this book, you would have had massive winners and you would have avoided a couple of the losers. Trend following, stock promotion. I talk about stock promotion. I'm the only guy who's ever talked about stock promotion. Amazing. It's 100. This is on Kindle right now. So you get this on Kindle. This is the greatest book ever written on stocks. I'm already on the TenBagger blueprint, man. Come on, I got the TenBagger blueprint. You want me to look at Kevin O'Leary, that fugazi, that mooch bum, who got paid $15 million to pump FTX? Anyway, TenBagger blueprint, the greatest book ever written on any subject. Go out and buy it. The paperback is going to be released next week. Kindle pre-publication right now. Order 1,000 copies. Hand them out to friends. And look, if you want to be a real humanitarian, you know, especially look, if you live in California, you see all these homeless people in LA on the streets, living on the streets, and you want to do something for these people. You feel sorry for these people. They're living in tents. I mean, you have all these kids living in tents in California, out on the street. I mean, they got $1,000 iPhones, but they're living in a tent doing drugs. What you got to do is you got to get the paperback I have of the book, maybe even the Kindle copy, and hand it out to these mooch bums that are living on the street, and they'll change their life. Because this book is going to give them a new outlook on life, do something productive, find stocks that become 10 baggers, 100 baggers, and become winners. That's what this book will teach them. So anyway, thank you for joining. See you at our next live stream. By the way, nothing here is any type of. Let me run a quick disclaimer. Nothing here is a recommendation to buy or sell securities. You know, everything here is, you should consider it as paid content, and we're compensated. Click the links if you want to know how much we're compensated. All updated links, everything is in the links, et cetera, et cetera. Okay, see you guys on our next live stream. Buy the book. Get rich quick.